I think the Bloomberg headline this morning probably sums things up pretty well of what we've been experiencing these last few days. It says the 5% bond market means pain is heading everyone's way. So nice cheery start for the day. In terms of yesterday or overnight, again, things sort of eased off a bit. Equity markets have opened in Europe a bit better today. And again, all eyes are on the employment data, the non-farm payrolls that we'll get mid-afternoon our time. In the UK, we've had a offer for Tribal Group today, which is a 40% premium, values the company at £160 million. Had a few issues, but I think quite a strong underlying software business. So more bids and offers coming for the UK market. Not much UK company news out. I know I've already spoken about Wetherspoons this week, but they have actually produced their full year results, which I spent most of my time looking at this morning. And the results showed a continued quite strong performance of the pub group. But as usual, founder and chairman Tim Martin updates his shareholders and investors on a wide range of aspects relating to the company in quite a broad context. This time he hasn't let us down. He's focusing on how lockdown policies unnecessarily impacted his industry, the pub trade, how the corporate governance prescriptions in terms of board composition are unsuitable for his type of business, and the unfair tax burden placed on the pub trade relative to the supermarket trade in the UK and how much tax they all pay. But I think on a sort of serious investment point, this is the 40th year since the incorporation of Wetherspoons in 1984. And today he's published a 40-year, quite detailed profit and loss summary of each year since Wetherspoons started with just a single pub, which generated revenues of £800,000 in 1984. Today it has nearly 1,000 pubs and 2 billion of revenue with operating free cash flow of £100 million. So it just shows you the long-term mindset behind this business and how, certain RNS announcements you read and you just know that this distinguishes certain companies having this mindset in terms of the decisions it makes in its business and the way it allocates its capital. And this is sort of summed up by the way he describes the near-term trading outlook for Wetherspoons in quite a cursory manner, and says the company currently anticipates reasonable outcome for the financial year subject to our future sales performance, which is nothing but the blindingly obvious. But he holds no truck in this sort of thing, how his business is going to perform in the next quarter or even in the next year. He still owns a large percentage of this company. And, it really does stand out in contrast to the way most public companies report their results.
Yeah, it's interesting. Always interesting RNS to read, but that focus on the long term, obviously paying dividends over time.